Welcome back, everybody. I am Christopher Bell. I am the host of Strongman Personal Finance. If you just stumbled on my channel, please hit the subscribe button and like this video. I am a certified public accountant. I'm a voracious consumer of personal finance information, and I love talking about all things related to taxes, finance, and economics. So I implore you, if you just found me, like the video and subscribe. If you already know me, you know roughly what I'm going to talk about. Now, I hear all these things going on in Congress and with the president about raising corporate tax rates because these communists and liberals think that if they just raised corporate taxes, they could take that tax money and transfer it to, less fortunate people. Now, the sentiment is very nice. They want to punish the evil corporations because they're just evil for whatever reason. And they want to help out people that are struggling to get by. That's so noble and amazing. And of course, their solution is, let's just raise the corporate tax rate because only the rich people benefit from corporations, right? Well, listen up. If you are a low earner or a middle class earner, the fastest way for you to build wealth is to invest in total world stock market index funds. Now, when you buy stocks, you're buying ownership in a ton of companies in the United States and across the globe, at least if you follow my investment philosophy. But if they raise the corporate tax rates, number one, that's going to reduce corporate earnings. And number two, even though you may think that, let's say your dividend tax rate is zero, even though you may think that you're not actually paying taxes when you get a dividend distribution, you actually are, because there's a tax built in to corporate income. Corporations pay tax, and then they pay a dividend to you, and that dividend is also taxed. So corporations actually experience double taxation. So if you raise the corporate tax rate, even if your dividend tax rate is zero, you're still going to have to pay freaking taxes, whether you see it or not on your tax form. Now, I'm going to show you how. I made this beautiful Excel document to show you why it's so stupid to raise the corporate tax rate. It's not going to help anybody, and it's probably going to result in people not even want to invest in the United States because the higher the tax rate on the corporations, the lower the after-tax return for everybody. Now, let's see. Let's dive into what I'm talking about, all right? So imagine we have two people here. We have grandma, she's old, she's in a really low tax bracket. She doesn't make a lot of money, so she falls in the 0% dividend tax rate. Now, dividends are taxed preferentially, and that's because corporations are taxed. So to avoid the double whammy of double taxation, they kind of lower dividend taxes and long-term capital gain taxes. Now, we have grandma who falls in the 0% dividend tax bracket. She doesn't make a lot of money, so whatever dividends are paid out to her from corporations, those dividends are not taxed. Now, Richie Rich over here, he falls in the highest dividend tax bracket, which is 20%. And then there's a surcharge of 3.8% for people who make a lot of money. It's called like the net investment income tax. But basically, Richie Rich pays taxes twice in this scenario, and grandma pays tax once, even though she doesn't think she does. And here's how it works. Let's say we have Stunk Corporation, okay? This is a, publicly traded corporation that pays a dividend. Now, every corporation is going to have revenues, which is money they take in, and they're going to have expenses, which is money that flows out. Now, when a corporation calculates their profit or loss, they take all the money they made, all their revenues, and they subtract out their expenses. What's left over is called earnings before taxes. So when a corporation makes a profit, they're going to have to pay a tax on that profit. Now, in the United States, the corporate tax rate is a flat 21%. So for Stunk Corporation made $100 in revenues. They had $50 of expenses, so their earnings before taxes is $50. Now, on that $50, Stunk Corporation has to pay a 21% flat tax. Now, you notice this is under the grandma column because even though grandma's not going to pay any taxes on dividends, which are paid out from the corporation from their retained earnings, she's still paying taxes because the corporation's earnings, of which she owns part of it, are being taxed before they are sent out to her. So Stunk Corporation pays a 21% flat tax on the $50 of earnings before tax. So the corporation is going to owe $10.50 of taxes to the federal government. Now, once you subtract out those taxes, the corporation's actual profit, which is their net income, is 39.5% or $39.50. So the corporation made $50, they paid some taxes, and now they have $39.50 of net income, which can then be used to pay a dividend, which you people seem to love so much, to the shareholders. So grandma owns a stock in this corporation. She's like, oh, I'm going to get my dividend and I don't need to pay any taxes. And she's right in a way, but she's also wrong, because the corporation, if it had been taxed at 0%, would have had $50 to pay out of dividends. But now, because they pay taxes, they only have $39.50 to pay out in dividends. So let's say the corporation's like, you know what? Let's take all of our profits for the year after taxes and let's pay a dividend to our loyal and beautiful shareholders. So grandma is going to get a $39.50 dividend. Let's say she's the only shareholder, which wouldn't happen. But she gets a dividend of $39.50, and she doesn't have to pay any taxes because the dividend tax rate, her tax rate, is 0. So she gets $39.50. But what is her actual tax rate? What is her effective tax rate? It's 21%. The corporation made $50 after subtracting out all their expenses from their revenues, and then they paid tax on that $50 to the government because the government wants to save the world and tax corporations. So the corporation only has $39.50. So even though her dividend tax rate is 0, she still paid the corporate taxes indirectly, okay? So poor old grandma is getting charged 21%. Now, what if we raise the corporate tax rates? Oh my God, we got to save the world. Let's raise the corporate tax rate to 40%. So we raise the corporate tax rate and boom. Now the corporation has $50 of earnings and they have to pay $20 of tax, which means they only have $30 of dividends to pay out to grandma. So grandma's only going to now get a dividend check for $30. And even though she has a 0% tax rate, she's still paying 40% taxes because the corporation did on its earnings, okay? That is why when people talk about raising taxes on corporations, it really affects the lowest earners. Now, you may be like, well, Richie Rich has to pay more taxes. And that's true. Now, if we go over to Richie Rich, so it's the same scenario, same exact scenario, 21% flat tax. So Richie Rich can also get $39.50. Now, since Richie Rich falls into the highest tax bracket and he's going to get that surcharge on top of it, he's paying 23.8% on his dividend. So if the corporation pays out a $39.50 dividend, he's only going to get $30.10 after taxes. So his effective tax rate, when you start from the corporation's earnings of $50, is almost 40%. So basically, whatever profit the corporation had before taxes, the government takes 40% of that. But Richie Rich has a lot of resources. He has accountants, he has offshore accounts. He can get out of this. If the government raises tax rates, he could be like, screw this. I don't want to pay a 39% tax rate. Let's say they raise the tax rate to 35%, right? So now grandma's paying 35% and Richie Rich is paying 35%. So Richie Rich pays 35% on corporate taxes, and then his dividend is taxed at 23.8%. Now his freaking effective total tax rate is 50%. That's ridiculous. And on top of that, they're talking about not only raising corporate taxes, but they also want to increase dividend and capital gain taxes. So let's see what Richie Rich would have to pay. Let's say they raise the corporate tax rate to 28%. All right, so grandma's paying 28%. And then his tax on dividend goes from, let's say, 23% to 40%. Look how much freaking tax this poor guy is paying. 56%. Half of the corporation's pre-tax earnings is taken away before he even touches the money. Now, why would you invest in a country that's literally going to take more than half of the corporation's earnings away from you? Why would you invest there? You wouldn't. So Richie Rich can leave. He can invest in companies overseas and use a bunch of, tax evasion and whatever, or tax avoidance, to not have to pay any corporate taxes at all. So let's say he invests overseas and they have a 0% tax rate. And because his money is, protected, he's got accountants and whatever, and he's offshoring, he doesn't pay crap. Now, he doesn't have to pay any taxes. But back in the United States, old grandma here, corporate tax rate's 28%. So she can't escape. She doesn't have an accountant to hire, or she doesn't have the ability to open up offshore accounts. So even though her dividend tax rate is 0%, she's still paying 28% taxes on every dividend she receives, okay? So that's the whole point of that video. Corporate tax rates are freaking stupid. There's no reason to raise corporate taxes. You could tax corporations at 0%, and that would actually help low earners because they wouldn't have to pay indirect taxes for the corporation, okay? That's what that is. Corporations are double taxed. So you don't want to raise corporate tax rates because rich people can go away. Poor middle class people can't. And the last thing you want to do is tank the stock market or really punish investors to get tax money. It's a short-term, stupid virtue signal, all right? So you should oppose the corporate tax rate. You should vote against it. It's stupid. I think it should be 0 because you can have the corporate tax rate be 0. People would invest in your country. And then if you really want to tax rich people, you could just raise the dividend tax rate. But grandma, since her tax rate's 0 for everything, she doesn't pay any taxes. But if the dividend tax rate for rich people is increased, but the corporate tax rate is still 0, you're still taxing the rich people pretty significantly. But you're not disproportionately hurting grandma because grandma is paying a much higher rate, okay? Now, if you have any questions, you can post a comment. Or if you disagree with me, that's fine. I'll hang out. But if you haven't already, please like and subscribe to my channel, okay? I make all these videos to show you how stupid taxes are. Are there any questions? Going once. Going twice. If you want me to attach this Excel document, I can. You can play around with it. But corporate tax rates are stupid. That's all I have for today. Like, subscribe, and I'll see you in a little.